Hello and welcome to the 3Bs podcast, where we go beyond the numbers and get into what actually makes a business work. I'm your host, Stephanie Marshall, founder of ABCS UK, a multi-award-winning boutique finance and systems partner. I help business owners who've outgrown the basics bring clarity, structure and proper systems into their business so things finally feel in control. If you want more clarity, more confidence and a business that doesn't feel like constant chaos, you're in the right place. Each week we tackle real problems, answer the questions you're probably already thinking, and give you practical steps you can actually use in around 15 minutes. So if you're ready to build a better business with confidence and clarity, then let's go. Hello and welcome back to another episode of the 3Bs podcast, your go-to place for around 15 minutes of motivation, education and inspiration to help you build a better business each week. If we haven't met before, hi, my name is Stephanie Marshall. I'm the founder of ABCS UK, a multi-award-winning boutique finance and systems partner, and I help growing businesses who have outgrown their bookkeeper move from messy reactive finances to clear, structured numbers and systems they can actually use to run their businesses properly, because I care about the people behind the business and not just the numbers. Today we're at episode 169, and today's episode is one that every business owner needs to hear, because I want to challenge a belief that causes a huge amount of stress. And that belief is this: if my business is doing well, there should always be money in the bank. Unfortunately, that's not how it works. I've seen businesses with healthy turnover struggle for cash. I've seen profitable businesses worry about payroll, and I've seen business owners convinced they're failing when actually they're growing. I've also seen businesses with plenty of money coming in make decisions that create cash flow problems completely by accident. So today we're going to talk about why good businesses run out of cash, because actually it happens quite a lot. And it's not failing businesses, not badly managed businesses. They're good businesses, because understanding this could save you a lot of stress. The first thing I need you to understand is that cash and profit are not the same thing. We talk about it all the time on the 3Bs podcast, and I know you've probably heard me say it and other accountants say it before, but let's make it real. Imagine your business generates £10,000 this month. That sounds great, but of that £10,000, what if £2,000 belongs to HMRC for the VAT? £2,000 is needed for your corporation tax. £3,000 is needed to pay your suppliers. £1,000 is needed for your software and subscriptions. Suddenly that £10,000 isn't really £10,000. It's already allocated. The problem is the bank balance doesn't tell you that yet. It just shows you a number. And that's where business owners get caught out time and time again. I'm going to give you a few examples. So let's go for a growing business. Let's imagine the business is turning over £150,000 a year. They've got clients coming in, sales are increasing, things look positive. But growth does create pressure, and business owners don't always see that coming. More sales, if you're product based, quite often means more stock, more software, more staff costs, more suppliers, more expenses. All of those things usually need paying before the customer money actually arrives. That's why growth can feel uncomfortable. The business is technically succeeding, but cash is under pressure. And that's not because something is wrong, because growth costs money, and quite often it takes time to get the money in from that growth. There's a trap here. So I feel like there's a trap where social media doesn't really help. There's a trap of looking successful. People see revenue screenshots. People like to celebrate turnover announcements. I've hit 6 figures, celebration posts, and they assume that that turnover equals financial security. It doesn't. I've seen businesses doing 6 figures that are more stressed than those making 4. I've seen smaller businesses that are incredibly healthy, because revenue tells you only one part of the story. Cash flow tells you another. I'm going to use another example here. If a business has £15,000 sitting in its bank account right now, the owner probably feels quite comfortable. Things look okay. Then the VAT return's due, and suddenly several £1,000s leaves the account to go to the HMRC. Nothing unexpected happened here. The VAT wasn't a surprise, it happens every quarter like clockwork. But it feels like a surprise because the money was mentally classified as available because they were only looking at the bank balance. This happens all the time. Business owners see money, they don't always see the obligations and what that money is earmarked for.
And that's where cash flow problems begin. As a business owner, your tax creates exactly the same issue, whether you're a sole trader and you are paying income tax or you're a limited company paying corporation tax. Your business has had a great year. The bank balance is growing. The owner feels successful. Then the corporation tax calculation arrives, or the income tax calculation arrives, and suddenly the money that looked available no longer feels available. Again, the tax bill isn't the problem. The lack of planning is, and that's a very different thing. This is where bookkeepers come into their own, where we always say you shouldn't have a once a year account and you should be having these conversations regularly, quarterly as a minimum, so that you can see where you are and where you're headed, so you can start to mentally or even physically allocate those funds into a separate pot in your bank account so that it doesn't feel available. You're not making decisions on the bank balance, you're making decisions on what's actually available. Let's go back to a few episodes ago when I was talking about an £8,000 invoice outstanding. So imagine you've got an £8,000 invoice outstanding in your business. On paper, you've earned that money. The work is done. The invoice exists, but the cash isn't in the bank yet. That means you can't pay your bills with it, you can't pay wages with it, and you can't pay tax with it. Because revenue or turnover and cash are not the same thing. An unpaid invoice is not cash, and too many businesses forget that. Because also when you have that invoice, if you are submitting your accounts on an accrual basis, not a cash basis, the tax on that invoice is due at the point you send the invoice, not at the point you receive the money. So sometimes the tax is due on money you also have not received yet. Now I want to talk about the hidden cost of taking money out, because this is a common issue again that I see quite a lot. Business owners need money. The business has money, so they transfer it to themselves. Simple. Except sometimes it isn't. I've seen business owners use company money for personal mortgages, private surgeries, unexpected household expenses, family emergencies, and while those situations are completely understandable, they still affect your cash flow. Because every pound that leaves the business is a pound no longer available to run the business. Again, the issue is not taking the money. The issue is doing it without a plan or an understanding of the consequences taking that money out will bring. Here's another one. Death by 1,000 cuts. You know those subscriptions you've forgotten about? The software you're not using? The premium package you no longer need? Individually, they're a few pounds here and there. They're small. But collectively, they can be really significant. We've talked about this before on the podcast, that most businesses don't have one giant leak siphoning money. They have lots of tiny leaks. And over time, those tiny little leaks all join together to create a massive leak. And that's where the pressure starts to build. I'm going to put my bookkeeping hat on now, because this is why proper management reports matter. Proper reporting changes everything for a business owner. Because when business owners only look at the bank balance, they make decisions using incomplete information. The bank balance tells you where you are right now. It doesn't tell you what's due next month, what tax is coming, what profit you've made, what cash is actually genuinely available, what trends are starting to develop. And that's why reporting matters. And not because bookkeepers and accountants like me love creating reports. I mean, we do. But because good decisions require good information. The real reason good businesses run out of cash, it's not usually because they're bad at business. It's because they confuse activity with visibility. They're busy, they're selling, they're delivering, they're growing, but they've not looked ahead yet. And business owners who don't look ahead are forced to react rather than be proactive and make decisions. Business owners who look ahead get to decide, and that's the huge difference. So you're probably thinking, Stephanie, what does healthy cash flow actually look like then? Well, healthy cash flow doesn't mean having loads of money in the bank. It means understanding what in the bank belongs to HMRC, what belongs to suppliers, and what belongs to the future. Because that shows you what genuinely belongs to the business. It means knowing what's coming before it arrives and not being surprised by it when it does, especially with things like tax that appear all the time like clock. As with every episode of the 3Bs podcast, I'm going to give you one move this week to help you move your business forward. And if you take action on that one thing, I hope by next week's episode you will see a positive change in your business. This week, sounds really simple, but may take you a little bit of time. So set aside maybe 10-15 minutes. I want you to open your business bank account. If you've got multiple, open all of them. Look at the balance and then ask yourself how much of that money is actually available. Not theoretically, actually. How much belongs to VAT? How much belongs for tax? How much belongs to suppliers? How much of it is for upcoming costs or wages? Because that single exercise can completely change how you see your business finances going forward. I would love it if you could give me a percentage. Find me on social media or send me an email and let me know what the percentage is of what you have in your bank versus how much of it is actually yours. Because I'd love to know how low it actually really is. Good businesses run out of cash every day. And it's not because they're failing. It's not because they're irresponsible. Usually it's just because they don't have enough visibility. Visibility creates confidence. Confidence creates better decisions, and better decisions build better businesses. If this episode helped you think differently about your business, please do like, rate, and review. Subscribe if you're on YouTube. Hit that notification bell. Make sure you're following so you don't miss the next week's episode of the 3Bs podcast. And if you did find it really useful, please do send it to a fellow business owner. Let's get more business owners finding this podcast and start running their businesses properly. If you'd like support creating clearer reporting, stronger systems, or more confidence in your numbers and don't know where to start, that's exactly what we help with at ABCS UK. All the links are in the show notes to book a call in our diaries because your business deserves better. I'll see you next week for the next episode. Bye.
And that brings us to the end of another episode of the 3Bs podcast. If this has helped you think differently about your business, then it's done its job. Make sure you're following or subscribe so you don't miss the next episode. And if you found it useful, please do leave a review. It helps more business owners find this and start running their businesses properly. If you want more insights behind the scenes and the reality of what it actually takes to build a better business, come and connect with me on social media. And if you're ready to stop guessing and start running your business with clarity, structure, and confidence, your next step is just a click away because your business deserves better. I'll see you in the next episode.